Every quarter result season is a great opportunity for all the investors out there. But at the same time, while the result season is happening, there is a lot of information, a lot of companies are publishing their financials, there is a lot of stock price movement. And not only there is a lot of noise on your social media. You will see a lot of messages coming from all around the places. And in this kind of situation, you are wondering, the companies which you hold, which are the horses which are running faster, and where you can make a better portfolio returns, where you can take a decision to take a better horse in your portfolio. So that is the topic for today's session. We are going to learn how to pick the best, fastest running horse in your portfolio so that you can make most of the earning season, the result season, which is going on every quarter, and find out the stocks which can earn a lot of money for you in the subsequent weeks and months to come. So what we are going to learn is a powerful topic on PEAD, which is called post earnings announcement drift. There is opportunity after result season, after even there is a spike or down move that has happened in any stock after the results, how you can make great and powerful returns. So let's jump in and let's discuss this topic in a deeper way. Awesome. So today's topic is speed, as I mentioned, and you can, if you are watching the recording of this, you can even fast forward this video for better experience. Now let's begin by sharing the screen, and I'll share this topic here. So what we are going to learn is what is this drift after the surprise earnings, and how does it happen, and how you as an investor can take advantage and make money out of this compounding journey. So the first thing what we are going to get away with is the disclaimer. A lot of examples I'll be showing over here. I might be owning some of the companies, or I might have recommended it to my clients. This is a quick disclaimer, so please make a note of it. Now, as I mentioned, after the result comes in, there'll be stocks which suddenly goes down as soon as the move has happened. So suppose a company have given result, it has gone 5% up, and then suddenly in next couple of weeks you will see a lot of profit bookings, and stock, whatever returns are there, that fades away. On the other hand, you will also see certain stocks where the stock price starts moving upwards even after the result date is over. So next coming few weeks or few months, you will see a continuous follow-up move of stock prices, and that kind of situation can give you some time. You are not a trader, you are a long-term investor, so you don't want to immediately react, but you can wait, understand the situation, and still you can take a benefit of this ride for subsequent weeks or months. That is exactly what we are going to discuss in today's session, how you can take advantage. And this is a pattern. If you are able to crack this pattern, you can do this again and again and again and again. So more than anything else, focus on how you can learn and imbibe this pattern so that you can repeat it and make money one after other. And I'll discuss a lot of other things also along with that in that journey. So let's first understand what is PEAD. So PEAD is nothing but post earnings announcement drift, which means is post earnings, that is the results are announced, there is some kind of drift in the stock price. So that is the tendency of stock returns to drift in the direction of earnings surprise, whether it is a upward or downward. We are broadly interested as a long-term investor in the uptrend, so that we can make money out of it rather than shorting it like a trader. So that is what is the PEAD concept. Now, why does this happen? It happens because many times the results of the companies are beyond the expectation of all the market participants. Sometimes it also happens when the company is really small and not many people are knowing about that company. So they take time on researching that company and they react slightly late. Sometimes it also happens because of there are multiple events that unfold after that. Basically, it takes some time for market to adjust around this anomaly where the price is not fully discounting what company is doing. Okay, and that creates an opportunity for all the investors like us, so that we can take part of this acceleration and we can ride this rocket and make money out of it. So that is the whole concept what we are trying to learn in today's session. So if we go forward, I'll be sharing this entire PPT with all of you. So if you want to download this PPT as a reference while you are watching this session, you can just scan this QR code, or you can just simply go to this link, which I'm just sharing it right now with all of you. You can even go to this link and you can bookmark this. Just give me a second. Yeah, the link is also here. I'll just flash it on the screen. It is also mentioned in the description. Okay, so what you can do is you can just go to this link. Okay, so you can just go to this link and download it. I'm just scanning through other slides so that you don't miss out on it. So what to look for in the PEADS candidate? Okay, so if you want to find out a PEAD candidate, the most important condition is this: you should have explosive earnings which are coming your way. If the earnings are explosive, there is blast that happens, like suddenly there is dhamaka, literally like a dhamaka in the earnings. That is the first very, very powerful thing, where a company is beating the street returns in a big, big way. So if you see a result which, companies are delivering like 10, 15, 20% growth, and suddenly you see a 80% growth, 70% growth, 140% growth, 500% growth, those kind of situation help you find out these candidates. The second thing which you need to look for is companies, as I said, which are not very widely known, and there is a less endless coverage. By the way, one of our member, his name is Gaurav Srivastava. He presented a very deep dive into PEAD a couple of months back inside our community. We have a big TechnoFunda Investing community, and a lot of pointers, I'm also using from his presentation, because he has done a very, very good job in writing it and also crystallizing a lot of these things. Okay, so some of the things I might be also using from his presentation as a pointers. Third is, mostly PEAD situation happens into a small cap or a mid cap kind of company. The reason is again very, very simple. As I said, we want to see a company which is not very well discovered. So if a lot of analysts are covering any company, or it's a large cap company, the price discounting happens very, very fast. So in that case, you might not get this kind of acceleration which we are talking about. Okay, so you need to find a company which is ideally in a small mid cap or a micro cap space. The smaller it is, the better it is. The lesser disclosure it has, the better it is. Okay, so that is the third thing. And please make sure you are noting down all these points, because all of these things will combine, and I'll be sharing a lot of insights connecting all the dots over here. Okay, so the next one is relatively low float. So if institutions are not easily able to buy it, float means there are less number of shares getting traded of that. And if you want to find out the float, what you can do is you can just go to shareholding pattern of any company. Like say for example, I'll just see an example of a company called NSCL. Okay, it's just for example. If you want to see the float, you see what is the public holding, and where are the majority of shareholders. So I can see like there are only 33,000 shareholders, and there is a smaller percentage outside left for other shareholders. So that is how, by looking at shareholding pattern, you can see what is the tradable quantity which is out there. The fifth one is low PE preferred. So if the company has low market sentiment, which means market has not already given it's a high PE, it is not having too much expectation from that company, that will give you an idea. Now sometimes company might have a 25-30 PE, but still that is not factoring the explosive growth of earnings in future. So if the earnings explosion happens much more than the current PE, which is relatively low PE. Again, the relatively low PE is very important to understand. Sometimes, market has built some expectation, but it is still relatively very, very low compared to where it can go. Okay, so still you might make a lot of money, even if optically it might look slightly higher in terms of PE. By the way, if you want to also learn about portfolio building and you want to go deeper around what I'm sharing with you right now, there is a video which I've done called how to do SIP in stocks. So you can just search with Vivek Mashrani how to do SIP in stocks. You'll find this video where I've gone deeper in terms of screening some of these candidates and how you can monthly deploy in some of these stocks. Okay, so you can go about going through that. The next one is high growth in a high growth in a company in a high growth sector. Now, if the sector also has a tailwind, okay, so if the sector is also growing and if your company is also growing, that is like a double dhamaka. Okay, so if the sector is undergoing explosion of opportunities and a lot of tailwinds, and at the same time, you see that entire company in that industry is also really doing good, you make most of returns in those kind of sectors. I've done a lot of sector analysis videos in this YouTube channel, so you can watch a lot of those. Like currently, agrochemicals is showing some strength, so you can watch a video on that. If you want to see a defense sector, I've done a deep dive in terms of defense sector. If you want to check out on capital markets, I've done a video on that. If you want to check out on auto sector and auto ancillary sector, I've done a video on that. If you want to check out video on chemical industry, I've done sector analysis on that. So if you go through my YouTube channel, you will find a lot of these videos which I've done at an appropriate time when the entire sector is going into a high growth sector. Same way, I've done for transformer sector, I've done for wastewater management. So a lot of sectoral videos you will find on my YouTube channel as well. And by the way, if you are not yet, subscribe to my YouTube channel, please make sure you check it out. And those who don't know me, I'm Vivek Mashrani, and I'm a TechnoFunda Investing specialist. So what I do is I blend technicals and fundamentals to get powerful results in my investing journey. So you can go through a lot of other videos as well in my channel. Now let's go to the seventh point, which is very interesting. Like earnings acceleration should be followed by follow through, which means one quarter it came in and then now nobody is caring if the next subsequent quarters are not delivering that growth. So once that high expectation is built, it's like, one of the kid gets the top rank in the 10th standard, you expect that kid to also be a topper in 12th standard and the engineering and so on and so forth. Now, if that kid doesn't perform in 12th standard, then a lot of other people will get disappointed. Okay, so it's a similar thing. You want to see a flywheel kind of effect. As it moves forward, it starts accelerating and it moves faster and faster. That is what you want to see in these kind of companies. And if you want to download the presentation, this is the link which I have given. The next one is count of PEAD candidates reduces towards the end of the bull market. Now, because a lot of these companies gets highly rated, like the PE multiple gets much higher, the earnings surprises can't do much push beyond a point. So the best part to play PEAD is mostly in the bear market or when the bull market is just getting started off, or if we are in the middle of the bull market. Like right now, if you see last couple of weeks, we had some bit of correction and now we are turning around. So this is the best time to actually find PEAD candidates and get most out of it in your investing journey. Let's go next is guidance matters the most. Now, if the management says that, hey, we are not able to perform so much and in going quarter we might not deliver, then things go for a toss. So along with the result season, along with all the numbers which are coming on, you also want some kind of positive management guidance where they are also saying that, hey, next quarter will do even better, or next 1 year is looking really good, next 2-3 years are really looking good for our industry, and so on and so forth. And if it is combination with a change in management or the track record of management is really good, then it is like sone pe suhaga. So if the management is really aggressive or there is a turnaround situation, it really makes a big move in the portfolio. Now, three things what you need to uh, know why this even exists. So first thing is investor psychology. Now, psychology is the most important thing in investing, but in this case, what happens is many investors take time to react, waiting for the analysis or some kind of confirmation on charts, and that makes the shift very gradual and not immediately everything gets discounted. Second is institutional momentum. You might be knowing that if a big fund wants to enter, they have a lot of compliances, processes to get the approval. Particularly if it is a new company which they've never invested earlier, even the compliance team and the management and the analyst team takes time to absorb things. and come to a conclusion whether it is a buy or sell for them. So that is also one of the reason that when institutions enter, they take time to build up the momentum. And third is market inefficiency, because there is less news out there, less discovered company, small cap or mid cap company. Uh, it takes some time to discover and adjust its behavior, and that is the opportunity for investors like us. Now, if you are all ready, we will do a lot of case studies. Okay, so just type in the comment box if you are ready for the case studies. And by the way, if you're not following me on Instagram, this is my handle, Vivek Mashrani. So please make sure you connect with me on Instagram so that you can follow me on a lot of updates which are very powerful out there also. Now let's go to the next part, which is how to screen such companies. Okay, so the first thing what you should do is make a list from either screener or trading view of companies in any particular quarter which are having strong earnings growth. So what you do is basically bring out the list at the end of quarterly earnings and see which companies demonstrated some good earnings growth. You can put a filter of 20%, 30%, 40% based on how explosive earnings growth you want to see. And that should be compared to the last year's quarter so that you are able to identify some spike in the earnings growth. The second thing what you should do is you start analyzing the quality of the pattern. I do a lot of deep dive inside my community also. We have an entire module on technical analysis blueprint. And for all our advanced members, we have a module called as Momentum Mastery, where we first see what is the strength of the company, what is the base quality. Like just to give you an example, let me show example of company called as Muzdoc, let's say. Okay, so if I'm analyzing Muzdoc, I want to see uh, there is some kind of base formation like this, that hey, there is some kind of formation that is going on. Say if I'm checking force motor, I want to see whether there is a good base quality. I also want to see the volume trigger and all that. Again, these are all examples, but this is what is my starting point. Then next I want to see whether there is some kind of accumulation that is happening. That is again based on volume I check. And if it is making new 52-week highs. Okay, so if you see right now, some of these companies are nearing 52-week highs. Even if I see some of the other defense company like say Solar Industries and so on and so forth, again, all these are examples. These are nearing 52-week highs. So I know that there is some kind of strength that is building up. There is some kind of demand that is coming up. And I want to see a high volume breakout. It should be breaking out from that pattern. The third thing which I want to see is verify it fundamentally, whether there is a sector tailwind or not, whether there is a four-cylinder firing. So I want to see explosion in terms of earnings. So I want to see what are the four-cylinder firing, right? So I want to see earnings growth in terms of sales growth. I want to see margin expansion. I want to see, operational efficiencies building up, and I want to see any kind of debt reduction that is happening. So I again teach this in a powerful way. If you want to learn this, how to find strong stocks, there is a video which I have done. So just search with Vivek Mashrani, how to buy strong stocks. You will find this video, and more on this entire thing, deep dive I've done in that video, so that you can learn this strategy as well. So that is how you go with screening, then going into technical factors, and then going into fundamental factors. As I said, I practice TechnoFunda Investing, and we basically go step by step into both the sides of the things, whether it is fundamental or technicals. So that is how you go about screening these kind of stocks. Then we will take a lot of case studies. So now it's time to apply the learnings. So we just don't learn, we also apply the learnings in a powerful way. So one of the case study is AMI Organics. So if you see AMI Organics in this quarter, like September 2024 result, revenue growth was 43%. Profit jumped like 323%. And next couple of months, we saw a 48% return. This is when market was not doing much and there was all these tariff correction and all that. So what they did a successful GMP compliance from PMDA Japan for their Sachin facility. The revenue guidance they increase. Remember I told you that management should be very positive and should be increasing the guidance. They also anticipated some of the headwinds which were there to get normalized, and overall they gave optimistic view of 25% CAGR. So that is the reason it blasted and it moved very, very fast. Second example is Pondy Oxides, POCL. This is where the earnings blast happened, like revenue grew by 36%, earnings growth went up by 150%, and within next 2 months the stock went 120%. Now this correction was because of the tariff and Trump and all that, but this was a PEAD that happened. So this entire portion was the blast, and you can see like this is a weekly chart, so it lasted for almost 6 weeks. So you can take advantage for multiple weeks and you can even build up the position. And these are the triggers. They increase the production and the sale price of lead increased by 46% and so on and so forth. And they are optimistic about future volume growth also. This is an example of TRIL or TARIL, now what it is called, Transformers and Rectifiers Limited. You can see in March 2024, you saw a revenue blast of 17%, earnings growth of 320%, and the stock returned almost 100% in 2 months. We also recommended this to our clients, and that company had a highest ever order flow of almost 2000 crore plus. There were total inquiries of 17,000 crores plus, and it like moved like crazy in a very, very short period of time. Another one is V2 Retail in February 24. The revenue grew by 56%. Market was taken by surprise. The earnings grew by more than 160%. And then the earnings momentum continued. The stock from almost 380 rupees, it went all the way around to 1700 plus. Okay. So this is the power of PEAD. You know, when it happens, it like generally continues for many months, many weeks. And if the company keeps over delivering on the results, and if the earnings keeps on coming quarter after quarter after quarter, the momentum, the stage two, the entire trend continues for a very long period of time. And those kind of opportunities, very short period of time, you can even make a multi-bagger returns if you play it right and if you manage your risk in a proper way. This is one of the stock which we recommended to our research clients. This is a snippet of our research recommendation. Again, please watch the disclaimer. So here, this is a stock called PG Electroplast. This is a company in the EMS space, electronic manufacturing, and the earnings and the profit blasted by almost 76%. Now, before split, this was 2,600. After split, it is somewhere around 260 rupees. Within like few months, it went multiple times, like 3-4x of this price, because of this kind of PEAD which happened inside this company. Another example in the same sector is Dixon, which is also into electronic manufacturing space, and due to a lot of tailwinds and government push and the sector growth, uh, one of the segments saw a 77% surge in terms of volumes, and because of that, from almost 5,900, it went more than 16-17,000 rupees in a very small short period of time. Like within few months, it went into a very, very big uptrend. So that is how a lot of these PEAD candidates make crazy amount of money if you play it right. So what you need to do is build systems so that you can play such powerful plays. Okay. And if you want to research these companies in a faster way, like if you want to check whether there is this four-cylinder model which I mentioned, like whether the earnings growth is there, whether the sector tailwinds is there. If you want to do these kind of fundamental research, and if you have lesser amount of time, say for example, I have done a detailed video on this, which is called how to use Chat GPT and power of AI in investing. So if you are free anytime, if you love tech, go to this video in my channel, which is called Investing with Chat GPT. You will find a lot of tricks and tips to navigate and do your research in a much faster way. And if you want to learn how to use some of these technical and fundamental tools like TradingView, Screener to screen these stocks, again, I've covered a detailed module on this. Just check out this video which I've mentioned, top 5 stock market analysis tools for India. I've covered a lot of these tricks, how you can manage this. Okay, so this is add on to apply all the things which I'm showing it to you. Now, it is also very important to manage your risk while you are playing these kind of situations. So risk management is the most important thing in investing. Always you should have a risk first approach, even though you are playing these PEAD candidates, and even if you see a post earnings announcement drift, you have to always make sure that you have some kind of risk management mechanism. Like even if you see in our research reports, we put a trailing exit. We exactly tell members, our subscriber, when to exit, because if you don't know when to exit, then you are entering into black hole. So if idea doesn't work out, and that can happen in investing, right? You entered with some hope, but that idea didn't work out, or the market conditions change, or the management guidance change, or something happened in that sector. A lot of risk can play out in that journey. So what you need to focus on is first overreaction. That, like, a lot of time there could be some very big move initially itself by seeing that big number, and then market comes to sanity and there is a reversion that can happen to the sanity level. There could be liquidity risk. Some stocks can be liquid, and if it goes into a lower circuit, you might not get chance to exit. Okay. Third is, if the market trend overall changes, like if there is any recession or broader market-wide correction, that will neutralize the shift. It's like a tug of war. Okay, so the earnings drift is trying to push it up, and the market sentiments are trying to overall push it down. And there could be one-time surprises. The company sold something, or they had one-time big gains, and then subsequent quarters there is nothing much that is coming up. That can not be a sustainable way to ride a PEAD on a long period of time. So the success of PEAD strategy depends upon how well you are informed, how you are prepared for your game, and the four major things what you need to focus on is look beyond earnings day. So sometimes we feel that, hey, now the results are out, the stock is already up, and the move has already happened, and we go into different things. But hey, if there is a earnings explosion that has happened, if you see a massive blast in the earnings, make sure you go through the results in a deeper way and find your horses which might be running even faster in the subsequent quarters. Okay, so we need to look beyond the earnings day. We are not day traders that, hey, one day trade and game is over. In fact, you can make much more bigger returns than traders if you focus on PEAD strategy. Leverage the behavior patterns. If you see institutional buying after a few days, leverage that and play that pattern. Make sure that you make your risk management as your number one priority, because if you don't manage risk in these situations, it might backfire and you might even lose money. And fourth most important thing is have your watch list ready. Like what I do is every week, every result season, I have this kind of watch list where I classify companies based on blue list, which is weekly basis, then yeah, orange list, which is like keep riding list, and some green list which I want to study, and red list which I don't want to participate. So this kind of watch list will definitely help you if you are investing into PEAD strategy. And yes, that is it for today's session. Hope you enjoyed the video, and if you love reading book, just check out a couple of my books. And if you are not yet part of my community, and if you have not watched any of my previous session, I would like to invite you in a special masterclass, which is absolutely free. You can go to this link, technofunda.co/webinar, and I'll meet you live and I'll explain detailed end-to-end strategy, how to build a powerful system like this for yourself. Okay, so that is it for today. And one more gift I want to give you is a SIP tool. Okay, so if you want to do SIP month on month, there is an Excel tool, automated tool which I've built, which will help you in getting a right allocation and going through this entire SIP journey in a very, very powerful way. So that's it from my end, guys. Thank you so much for joining me live on this session, and wish you all the best. Keep compounding, and yes, keep compounding.